Hey folks, welcome to the Market Internal Review for July 21st, 2023. So today we started the Friday with a gap up from overnight, mainly pushed up in the morning session pre-market. So we opened up with a $1.75 gap. Now we didn't quite make it, but we opened up almost to Thursday's opening price. So I think that's important to note that. It's something I will refer to every now and then. Interestingly, though, it also was, I think, actually to the tick, the high of yesterday's first deviation on the TWAP. So very nuts to see that. It was interesting open today with the ad the way it was. We opened at 900, but then in the first 2 minutes we tried to break 1500. So that was the first thing I was paying attention to, and tick was at an incredible high, and you can see we had the extreme closure up here on the bullish side. Now the first thing I'm watching for is, are we going to sustain this 1500? Given the bearishness that we saw yesterday, I just wasn't buying it. I saw a potential trend balance continuation. These extreme highs out of gap up right under 1500 on the ad. Then I see this bar break down. So that definitely had me thinking this was going to be potentially a reversal, at least to yesterday's TWAP price. Now, in some videos from last week, some videos this week, I mentioned that I was expecting some kind of a pullback based on the weekly and monthly TWAP, and we'll look at that here in a minute, but we definitely received a fair bit of it yesterday, save for the Dow, and I want to say IWM was making some interesting movements. But anyways, this TWAP price on the session, we weren't holding it, and we're using the first standard deviation high right where we open and reject from Thursday's TWAP prices. And I'm just kind of watching that. So seeing this continue to decline, even though the price is trying to stay high, that's a divergence. I'm seeing the cooling off on the ad band. And I'll be honest, I shorted this, grabbed a good fair bit of it, saw the trend imbalance indication with an ad and vol bearish flip, and I really got excited for more downside. We didn't see it. We rejected hard right off of the Thursday first standard deviation low price. So that was wicked to see that. Then we get a current session first standard deviation low break and retest on this nasty engulfing candle. I mean, it took out 3 bullish candles right next to it. And then we come right back down, reject on this again, and bounce all the way right up to this level. So living through that, I'm seeing some and just crazy mixed signals here on the trend for both the ad and the vol, the price and the volume of the New York Stock Exchange. It's hot, and then it's cool, it's bright and dim. Volume's even worse. It's bullish 1 second, cooling off, then it's bearish another second, then it's cooling off. I mean, it's just all over the place. And I'm just seeing a ton of oscillation just happening, at all points. Many divergences from tick, and so there was a tweet I had shared from yesterday that today there was going to be about $2.3 trillion of options settlement. So definitely something that I kept in the back of my mind. Usually the days that happens, like was it quad witching and different things. It's when many different expiration dates that are usually on their respective cycles, they're all converging at one point. And anytime you have that, it creates a lot of sorting type movements in the markets. And then when you have it, and it's also a mega crap ton of liquidity that's being settled, it's even worse. So I was glad to get a couple pieces of this, but midday we lose trend completely, and it's just all over the board. This whole area, I mean, it just probably made you want to hate yourself if you're trading inside of this. What is this? 453 to 4. Okay, it's like a 70-cent range. Completely illogical movements. Save for, by the second time I saw the rejection of this price line here from yesterday's TWAP, that's essentially when I figured out that for the most part we're probably not moving any further beyond that point. Just given the fact that even though the ad and vol, the price and volume of the market is technically, by it being a green band, bullish, it's just really not. I mean, these trends are all over the place. I'm watching the ad value itself throughout the day, and it was at its highest point here, and then it was never anywhere near that high for the rest of the day. So shorts off of the price level here of 453.98 would have been key, and then longs from down here would have been mostly decent until the end of the day. So we didn't quite hit it here, which was a little bit of a disappointment. Just not having the confidence. Like, if it were down here, it would be something I'd be more interested in. But scalping short and long throughout the day, standard deviation breaks were just not it today. But those are pretty much something you only want to really try when trend is showing an imbalance, these white dots down here. And we barely had that at all today. We had that for the first hour and a half, and then past that we had almost nothing from trend for, gosh, was at least half of the market time today, from 11 to basically 1:30, almost 2. And then we get imbalance peeking in on trend, and we kind of just have more of the same. I mean, as soon as that imbalance shows up, that's effectively when you should start looking for reversals and mean reversion. And this was probably the most perfect setup all day, because we can expect mean reversion, so we're at least going to TWAP. But since we've already established that we're fine going to the first standard deviation high, which coincides with this price from yesterday's TWAP, you can pretty much expect that we'll see the opposite end of the same deviation. So we almost made it to the second deviation high at 1:30 today. So notice right where we stopped was second deviation low, which we had already visited as far as for a downside move once around 12:30. So almost 12:50. So that's basically where we ended, but we stayed within the range of yesterday's first deviation ending price the entire day. So the tick levels were, I think, quite helpful if you're not using the price levels of TWAP, or if you're not using TWAP itself. We just turn those off for a second. We turn the drawings off, and personally, I just find this so fascinating how this works. These bullish tick levels show you that the bulls were really pushing right here, and this was an upside move that created this tick break of our 500 configured value for tick, and then we reject right off of that. So unless we get past this, I wouldn't expect any bullish movement beyond this. And we had a fake break right here, and that's it. So we break, we retest, and then we fail. We break, we retest, and then we fail. So this was another key short just based off of tick levels alone, expecting at least a retracement back to this bull level here and then this bear level down here. So we basically hit that. Beautiful short, very clean. This is this was probably one of the better shorts. I mean, if you didn't get in from here, this one right here was really great. Which that move alone, let's say you get out of this in golf here, that's $1.24. That's a really good move. But you had to wait all day, and you had to see a lot of this weirdness. But these tick levels, personally for me, give me a lot of confidence, and we're looking at trend balance. So mean reversion reversals, and again, if we have TWAP up, then we know we can at least expect standard deviation low on the first, but since we've hit the second, then maybe the second low, which is down here. So very neat. The Qs, if we could look at Qs real quick, the Qs were a lot weaker today. Looking at them, they definitely were still choppy. They had a gap up, 249, 250 gap up. But I mean, they weren't playing at all with yesterday's first standard deviation high price at 381. They were living much more in the lows of previous days TWAP prices. First standard deviation low target price and second was actually hit at the end of the day. They retraced the TWAP only a couple times. Some fake out area here, I would say, given that we're looking at imbalance per trend, and some counter moves to the trends of add and vold. But I think overall still pretty clean as far as the trends. So price in the New York Stock Exchange dropping down here and here. You can see it mostly aligns, but this is the same area where SPY was probably just hellacious to try to do any kind of trading. No thanks. This was pretty terrible. But yeah, nice clean break of TWAP here, clean retest, and this right here was really clean as well. This was just like SPY. This was the best entry, just based on this candle action here, and then what everything's showing you here. So very interesting day overall. I'm mostly interested now that we've gotten through whatever the heck this was. What's the small caps and what did Dow do today? Because as I've been mentioning, I think we're seeing some rotation. Today we obviously saw some liquidity sorting with all the options. So see, it had a big gap up, and then we lost all that. Had one TWAP retest, and that was basically it. They suffered quite a lot today. Let's see. Yeah, $2 on the Russell, and then the Dow. So Dow was a lot flatter, but they still saw some drop, 70 cents, nothing too exciting. They still remain to be one of the stronger ones, even though they did have a little bit of a drop. They didn't gap up as much, but this reclaim here, or rather this reversal here, was pretty powerful statement, I think. I don't think Dow's quite done. I know yesterday Dow had quite a different day than the rest of the indices, so they finished up $1 when you've got Qs that just got slaughtered. So we've seen tech have this insane rip for I don't know how long. Okay, $6 on Qs. I thought it was more than that. I think from Wednesday's closing price, it was a fair bit more. Yeah, so if you include the gap, it was almost $9. So I was a little bit off, but still quite a reversal from the weekly high. Dow's been strong still. Russell, I want to say Russell overall has been given some up. So they gave some more up today, $2, but they did it from a gap. So from the peak. Okay, so from the peak of the week, the week peak, they've come down about 314. Pi fans will be ecstatic with that. And then SPY from its weekly peak, let's see, what have we come down? That's roughly the high, roughly the low, 410. So none of them are as bad as tech. Tech we know is weaker across the board. Here I'm just typing in tech instead of Qs. Let's look at the monthly TWAP. I'm going to guarantee you we're back into the first standard deviation. Yep. Okay. So first standard deviation on the monthly. That's pretty huge and telling of where we might go still for the rest of this month. We still have week or so left, and this level here from June's TWAP, monthly TWAP, 378.46. So you can see that area has been something we've bounced on a handful of times. So, and so is this one, 372. We actually gap right up on that July 12th, and we wrestle with that whole day. We rocket past this, break out of third deviation, and come all the way back down to sit on this. So interesting to see that today's price started right above that, and then we reject it here. So I think what we'll probably continue to see is more retracement towards the monthly TWAP price of 373, unless they do some shenanigans and we gap back up somewhere over here, and then we continue to dump back down again. So with us being on SPY already in the first deviation for the week, and then for the month. Okay, so for the month, we're actually not in the first deviation on SPY. So that could be comforting or not. I think SPY basically, SPY mainly did that. So 449 on SPY could be next. Maybe we'll come visit this range down here. I mean, this is a massive range now. This first deviation, we haven't spent any time in there since early this month. So I'm still holding some bearish sentiment that we're probably going to be visiting this area, but we will see. It'd be great for the bulls if we could bounce 451 and head back up for the rest of the month. Looking at the internal charts, I'm going to skip tick. I think the MIT histogram already covers it, but I will look at trend here. Trend, so here's perfect review of the morning. So first candle is right here at the bullish zone. Okay, we start here, and remember, trend is inversely correlated to SPY. So we start here and we run up right to balance. And recall the first candle on SPY was a big dump candle. These are huge candles for trend. We're wiggling around really fast to balance, and then we propel right to bearish zone without any hesitation. So this was where I had a lot of my short confidence to enter shorts in the morning. We leave the bearish area pretty quick on the day. We spent hardly any time there. We spent 90% of our time outside of any of the extreme zones, and not even in balance, not until the last third of the day. So a painful day From the ad standpoint, look right here. The ad is sitting right under 1500. They pump it right up and then reject immediately and fall right over to balance. So another clean short setup. Recall, if you've watched any of my other videos, just because we open up here doesn't mean it's a bullish day. Just because we get here doesn't mean it's a bullish day or that it's a bullish move. It could be a test before we dump off all the way to bearish. So we have to be here to be considered quote unquote overbought to then sell off, right? There's going to be profit takers on both sides no matter the sentiment. So this was another clean short setup. As far as the volume goes, just as flat as ad was for the rest of the day. I haven't seen a flat vol day in quite some time. I mean, we had one yesterday, but again, I think I said in one of the last videos, we've just been having these straight directional moves on vol for even the choppier ones, right, are still directional overall. I guess this one, but it mostly just really nice directional type vol days. Today was not one of those days. Very clearly just stuck right around zero. So balance volume is neither bullish nor bearish. It's not going into advancing stocks or declining stocks on the whole. It's basically a mixture, which comes right back to what I said about when you have the options market, which in my opinion runs the whole dang show. When you have all those different contract expirations sorting out their liquidity, large settlements to the tune, in this case of today, $2.3 trillion. That's a good day probably to maybe go trade more independent names, stay away from the indices. I don't know. I mean, there was some okay moves today, but I think skipping today maybe would have made sense overall. So heading into next week, like I just said a moment ago, I'm going to have a bearish sentiment, but I will continue to use the data intraday to guide my trades. On days like this, where you know it's going to be choppy, or you have a high degree of confidence that it'll be choppy, like the option settlement, maybe just use tick, fade the tick highs and lows. So, fading some of these tick moves would have been good. So fading the bull ticks at highs, fading the bear ticks at lows, use the tick levels. I personally like these TWAP levels. They just have a high degree of accuracy when we're inside of them for some reason. I would just say heading into next week, I'm going to expect some more downside, but I'm going to expect gappy type mornings and just craziness throughout the week. As we perhaps fill in some gaps and fill in some of the order book that maybe we left behind ripping over the past handful of days. So anyways, I hope you did well today on the market. I always appreciate you watching. Feel free to leave a comment or reach out on Twitter. Have a great weekend. As always, happy trading.